Hello again. This is Jerry from ForexTradingMagic.com. Thank you for listening today. And this is our first lesson. And today we're going to talk about two things. We're going to talk about dynamic support and resistance, and we're going to talk about the rule of threes. So this is video lesson 1 in the series of dynamic support and resistance. And later on, after we cover this, we will be talking about the rule of threes, and not to be confused with 3-bar support and 3-bar resistance. So now let us designate our starting point. Let's click here, and this is the USD, Canadian dollar. And our starting date, not that it really matters, but our starting date here is going to be February 26th, 2008. And we're going to talk about dynamic support and resistance. Now, you know how I'm always teaching that a market threads support and resistance in the same way that a spider threads a web. And in fact, support and resistance is not static. It does not necessarily stay in one spot. Support and resistance is dynamic, meaning that it is constantly moving, constantly being rewritten, at least over the short term. So, let us begin. Now, when we talk about dynamic support and resistance, it's a little bit different from when we talk about major support and resistance and minor support and resistance. Dynamic support and resistance can be considered as support and resistance levels that are being threaded in between major and minor support and resistance levels. So dynamic support and resistance is good for when you miss a move, when you miss your entry level. It can give you a good indication on how to get in on the move safely after you have missed your optimum entry point, and still get in and ride the move in the direction that the trend dictates. And the other significant difference between dynamic support and resistance is that thus far we've talked about the closing highs and the closing lows. But when we talk about dynamic support and resistance, we're going to focus on the extreme highs and the extreme lows, meaning the extreme high of an up bar and the extreme low of a down bar. And I also want you to keep in mind that this strategy works best on intraday. I mean, we can still follow the same concept on the daily, weekly, or monthly chart, but it works a lot better on the intradays because, for instance, we're looking at the 1-hour chart now. So when we do it off the 1-hour chart or the 4-hour chart, you're going to have significantly more opportunities, and you're gonna know. First, let us remove our line here so we can see a little bit better. And we'll draw our line here. That's the high of the green bar. That's the extreme high. You see how when price moved up here and stopped here and began down. So we will begin here. This is resistance. Now, when we start going down here, where is the next green bar? We see here that these two bars are red bars, and here we have the next green bar or up bar. Once the market is falling down, once you see a green bar, that's called a turn. Okay, once you see that turn, you know that support has been established, and once you see that green bar, we go down and draw our support line right at the extreme low of the red or the down bar. So right now, at this moment in time, on the 1-hour chart, this is our current most dynamic support and resistance level. So we have a support level here at 0.9944, and we have our resistance level here at 0.9944. 0.9984. Now once we have that situation, once we have our support and resistance lines drawn, we immediately consider our breakout strategy. Now this is best used on breakouts and pivots, and we're going to use our breakouts and pivots in the same way that we always have. The only difference in this is that we're using the maximum high or extreme high of a bar, and we're using the maximum or extreme low. Now on the way down for support, we want to make sure that low is the maximum red bar, not the green bar. The green bar may make a lower maximum low than the red bar, but we want to draw our support line at the red bar. And the same thing up at the top. The top may have a red bar that's higher than the highest high or maximum high of the green bar. Yet we still want to use the maximum high of the green bar. And that is for reasons that you've learned thus far, because this is where the sellers are below support. When we go up to this green bar, this is where these buyers, they're going to turn into sellers and start selling. And above resistance here, if price moves back down, okay, this green bar here is where the buyers or short sellers turn into buyers.